Hey everybody, my name is JJ. You're watching Bull Boom Bear Bust, back with another dose of economic reality. We've got a lot to get into, folks. A lot of recent developments, a big announcement as far as what's going to happen to something that about half of the country purchases on a regular basis. A huge price drop is predicted. We've also got a prediction of this is the calm before the storm, that things are about ready to get a lot more expensive overall. So who's right? Which side's right? We're going to talk about that and more. Also, inflation cooled to the lowest in 4 years. Is that good news? Don't get your hopes up, folks. It's better than what we've seen previously, but it's still not good news. I'm going to tell you why. Let's go ahead and get started right here. And the most accurate headline I could find was actually NBC and the CPI, the Consumer Price Index, which is widely used to gauge inflation and how much people are paying for lots of things, lots of different stuff, went up 2.3%, or it's up 2.3% year over year. Now that's still up, and it even says here, April inflation report shows prices grew, keyword right there, prices grew, prices are still going up, at the slowest pace since 2021. So that's the positive headline, is the slowest since 2021, but prices are still up. In fact, even from March to April, prices did tick up a bit. But year over year, prices are still up 2.3%. So really not what we were promised, not what we were told was going to happen, but there could be some information that we're going to talk about here, some things that will tell us what's going to be happening down the road with inflation. But here is the trend that the current administration is bragging about. We've seen slowing inflation now for 3 months in a row, and this is even with the tariff scare and people running out and buying things before prices go higher. Now, with the trade negotiations that were just changed yesterday, we have a 90-day reduction in tariffs, especially with the big one was China, going from 145% down to 30% for this 90 days. Some of that panic should be subsiding, but we also saw prices go up from March to April 0.2%. So prices are not coming down overall. In some areas, yes, but CPI is still positive, means prices are still going up. We need to see a negative number in deflation instead of inflation, right? So the whole topic of inflation just means prices are going up. The question is just how much and how fast prices are going up. And we even have a chart here that shows the 2.3% number for April. And then you have the core CPI, which excludes food and energy. That's actually up 2.8% year over year. All right, so pretty interesting that we are seeing inflation continue to slow, even though prices are still going higher. All right, but we have to talk about this because it's such a big thing. This number comes out every month, and stocks will either sell off or gain depending on these numbers. It's a number that people talk about, even though it's very underreported. I mean, inflation actually is much higher than this number because they don't count a lot of things that people have to spend money on. But it is worth noting again that this number just means prices are still climbing. Most people that I talk to, they don't want prices to go up at all. They want prices to come down. So anything that's a positive number in this number is not good news for most people. There are exceptions out there. Some people want prices to go up because they think their assets are going to be worth more. For example, homes, that's one thing. Investments, of course, we want those to go up, especially if you're invested in the markets, you want prices to go up. The thing about this is when the cost of living gets too much for people to keep up with, they're going to have to cut back on their spending. And when we see big cutbacks on spending, you're going to see that finally come into the markets and corporate profits and all that. Right now, we haven't seen much of a slowdown in spending. People are still spending money. Debt's still going higher. And it's mostly borrowed money. It's mostly debt-driven spending. And that's because the banks are still willing to let people continue to loan out money. And that's because we have a baseless currency right now where you can just borrow as much as you want to without ever having to worry about paying it back. And that's the truth. I mean, look at the U.S. national debt right now. All right, looking at the chart on this here, real-time chart, we're looking at 36 trillion 845 billion 935 million and that just ticked up to 936 million, right? So it's changing right before our eyes. It's continuing to go up at a rapid pace, regardless of the cuts that we were talked about and the spending that was reined in by this administration and the investigation and Doge and all that. We're still seeing debt climb, even at a more rapid pace than just a few months ago. So something is not adding up here. I'm not really seeing the purpose of all these cuts and investigations and slashing of all these jobs if we're not going to slow down the amount of debt and the rapid rate of debt that we're taking on as a country. We're told that at some point we have to pay back this almost $37 trillion now, but it's not possible. So somehow, some way, sometime, at some point, there's going to be something that's going to change where I don't know who's going to do it and when they're going to do it, but they're going to say this is impossible to pay back. We need to just cut it off, change it over, reset. There's a lot of different words and phrases that have been used to describe that. Financial reset is one word that's been kind of floating around because debt forgiveness is something that happens on a small level. Look at all the people that got student loan forgiveness already, even though they've kind of reversed that now, all the way up to a macro level where nations have had debt forgiven. It's actually happened where entire nations have had their debt erased. That's what's going to have to happen to the U.S. Otherwise, we're just never going to pay it back, folks. It's never going to happen. And then once the powers that be realize that it's never going to be paid back, when does the credit card get cut off, right? When does the endless debt get cut off, right? The flip side of that, the scary side of that, if it never gets cut off, then we could see inflation that never ends, folks. But something big has to happen to flip this whole table upside down. Otherwise, most people are going to be on the losing end of this card game. You know what I mean? All right, now just some numbers to go over on this topic here as far as cutting these agencies, cutting federal workers, stopping payments going out to all these places that were discovered to be either fraudulent or misaligned payments, miscategorized. They're saying now that the total savings because of these cuts and the pulling back of the spending is now totaling up to $427,437 million, and the clock is counting still on that one. Will we see the money come back in the form of checks? That was floated out there a couple months ago. They said, there's likely going to be checks. I told you I really doubted that there were going to be checks sent out. Some people called them relief checks. Other people called them stimulus 2.0. Whatever you call it, it's going to be inflationary because if you give people a bunch of money to spend all at once, they're just going to go out and spend it, right? They're not going to put it in their savings account. Most people, some will. Most people will just go out and spend it as fast as possible. And then what happens? You see the prices of goods, items, cars goes up. Homes goes up because more people have a down payment, so they can qualify for a loan, for a car, home, etc. Or they'll just go spend it, which will create more inflation on where all these people are going to go spend it at, whether it's your concerts, amusement parks, ballparks, the mall, etc. Would cause inflation. So I don't think they're going to send out refund checks or rebate checks, as some called it. I could be wrong. Let me know what you think down in the comments. Will we see refund checks from this so-called slashing of spending? I would say no, because the debt is still going up. It doesn't appear to be factored into the total debt that we're borrowing as a country with the unlimited credit card that the U.S. has. That's another thing, too. We're told that the U.S. is the number one economy, that we're the world's richest nation, when in fact it's just the opposite. We're the world's largest debtor nation. Most of you know this. We're the world's largest debtor nation. But the propaganda talking point says that we are the world's richest nation and that we need to pay for everything throughout the world, right? So things are changing and some people are very happy about that. Will there be a point when we actually notice it as working people? Will we notice the savings and this cutting to where it actually has a positive effect on most people's lives, right? That's the big concern that I have. All right, but nonetheless, I mean, going back to the CPI number, it is the lowest reading that we've seen in 4 years. So still not good. Prices are going up, but if you want to look for some positive news, could have been worse, right? It could have went up the highest in 4 years, right? So good news there for the people that are looking for a lower cost of living. We see rents came down 1% nationally. Some cities, some areas seeing even bigger price declines in rents than the 1%, but not enough to be noticeable. 1% is not a life-changing thing, is it? But take a step back here and think about all the fear headlines that were put out that prices are going to skyrocket, shelves are going to be empty. Remember last month there was all these predictions that the shelves were going to be empty starting now. They were supposed to be empty now. I don't see too many empty shelves. And now the tariffs have been backed off, at least for this 90-day temporary pause or reduction. So will we not see any empty shelves as many had forecast? I said right here, I don't expect widespread empty shelves because I said they would have to come up with some deal at some point. Otherwise, they're going to be out of office in a few years because they're not going to get re-selected, because when the price of everything goes up, nobody wants to re-elect those people. So obviously they had to do something, and that's where we saw the negotiations came in and the temporary pause on the tariffs. But back to what we talked about at the beginning of the video. Who is predicting the calm before the storm? Here's the headline right here. The calm before the storm. Prices drop slightly. Not true. Prices still went up. I don't know why they're saying that. But tariffs could push costs higher. So they're saying prepare. It's the calm before the storm. Many people are still predicting that prices are going to go higher down the road. A few weeks, a few months. Well, it's already happening. Prices went higher, 2.3%. Again, it's not a negative number. So all these forecasts of higher prices, it's not a forecast. It's here today. Prices are going higher compared to last month, compared to the year before, right? So the way these news outlets are reporting this is really kind of strange, isn't it? All right, so let's move on here, folks, to another topic that definitely is a lot of news out on this, folks. Still more layoffs are happening. Not just federal layoffs. Look what's happening. Microsoft laying off about 6,000 people, folks. That's 3% of the entire workforce, right? We're told that there's going to be a manufacturing boom, that companies are going to come back here to the U.S. and open up shop. Well, if you ask Microsoft, they're not too confident that that's going to happen with this cut of 3% and 6,000 people. Wow. The makers of Windows and Word is aiming to reduce management layers. On Tuesday, they said laying off 3% of the workforce. Quote, "We continue to implement organizational changes necessary to best position the company for success in a dynamic marketplace." Unquote. So pretty interesting. We'll have to see if we're going to see more cuts out of Microsoft, or is there going to be this big boom where there's going to be tons of jobs coming back to the U.S.? I'm not sure who actually believes that, but that's what we're told is going to happen. And more on this topic here, more layoffs. Nissan doubling its layoffs to about 20,000. Wow, Nissan, 20,000. The CEO spoke out recently, unveiled sweeping new cost cuts Tuesday, saying it would eliminate 11,000 more jobs and scale back production, capping a tumultuous year that has left the Japanese automaker fighting to turn itself around. The new layoffs would bring the total to 20,000 after the previous announcement of 9,000, right? So things are still headed in the wrong direction as far as manufacturing jobs coming back. Now, not all these cuts were in the U.S., but I think it is an indicator of what's really happening with the economy. Now, another entity that's facing really, really big layoffs is the IRS. Let's bring up a picture here. All right, we've got this IRS agent ringing somebody's doorbell. Pretty scary, right? The IRS is a scary thing. Well, actually, I know some people that say that they're not filing because they think there's going to be so many layoffs that they're not going to be auditing people. I would caution against that. I would say pay your taxes because you don't want this guy ringing your doorbell. You know what I mean? And here's what's happening as well. The IRS plans to implement AI into its workforce after it lost 11% of its workers in March. So they're still going to be, I think, looking at people's taxes. They're going to be coming after you if you don't file. So I would never tell anybody not to file because that could be very, very bad news. All right, but now on the flip side here, some positive news, if you want to call this positive news. Some jobs are likely going to be coming back here. We've got AnheuserBusch announcing a $300 million boost to manufacturing careers and veteran employment. Anheuser-Busch has invested over $2 billion in its 100 facilities in the U.S. over the past 5 years. And what they're saying is they're going to bolster manufacturing jobs across the U.S. and especially supporting veterans who are pursuing manufacturing careers. So I guess with all the beer drinkers in the U.S., it's going to be in high demand. But here's the real story about U.S. workers or non-workers in this case. A study just came out here, and it's being widely reported. NPR even talked about it. Why aren't Americans filling the manufacturing jobs we already have, right? Because most people in the U.S. are on some sort of medication. Half the population's obese, and most people can't even handle it. But here's where we are. Nearly 500,000 U.S. manufacturing jobs are vacant right now. This is out of NPR. Openings peaked in April 2022 at about 1 million after the post-pandemic spike. So even though it's came down, we're still at about 450,000 unfilled manufacturing jobs. And there's plenty of people here in the U.S. to do it. People just don't want to work hard. And that's what I've said here before, that even if they do bring manufacturing back to the U.S., good luck finding people to do it, right? We have a big shortage right now in people enrolling in the military because they're too out of shape or they're too problematic as far as medical issues to even enroll in the military. This country is not made for manufacturing, folks. So I see big problems with that. And maybe it'll change. Maybe people will get more adapted to working actual physical labor jobs. But if you ask most people, they don't want to do physical labor, right? Especially young people, right? People want to be influencers. They want to sit back and do day trading and make a bunch of money by typing on a keyboard. Most people don't want to work hard. I mean, I do mostly office work now. And but I was young, though, in my 20s. I worked at a lot of different physical labor jobs. I did roofing. I did steel frame building construction for like not even a year. And then paving asphalt roads, mostly parking lots, but some roads. Asphalt work, that was hot. That I mentioned roofing. I worked in a vehicle manufacturing facility in Michigan in the early 2000s, late 90s rather. And it was hard work, right? On my feet all day. And when I was young, I could handle that. Now, I probably wouldn't want to do that. If I had to do it, I could. I'm still not in bad shape. But I could see how most people just don't want to do a physically laborious job, right? Even standing up at a fast food place is a lot of work. At the end of 8 hours, your feet start to hurt. In any stand-up job, cash register, whatever, starts to hurt after 8 hours. I've been there. I've done that. So, yeah, I think these 500,000 vacancies are for that reason. One, people don't want to do it. They're not even capable of doing it, even if they wanted to, because of a lot of health issues. On that topic, U.S. News just came out with the 10 most obese states in America. I was curious to dive into this because this has to do with are people capable of even working these jobs, right? Well, when you look at half the population, it's pretty bad here. So the worst is West Virginia, almost 42%. Arkansas, over 40%. Mississippi, Louisiana, Alabama, Oklahoma. Wow, a lot of southern states. Iowa, Kentucky, Indiana, and Tennessee coming in at almost 38%. It's interesting. It's all southern and Rust Belt states and some the Corn Belt, Iowa, Kentucky, Tornado Alley states, Oklahoma. Pretty interesting. The states with the least obesity: Colorado, Hawaii, Massachusetts, California, New York, New Jersey, Vermont, Connecticut, Florida, and Montana. So pretty interesting there. Now let's transition a little bit into real estate. You know, the housing bubble. We're going to talk about housing pretty much every report because that's the biggest things on people's radar right now. Or the biggest thing is looking for affordable housing and the hope and dream of buying a home someday for most people. Most young people are thinking they can't ever do that or will never do that in their life. But there are some things changing, and we've talked about them here recently. The inventory is at about a 5-year high. Prices are down year over year, not with the 20 major city index like the Case-Shiller, but if you look at all across the nation, including rural areas and country areas, prices are down since the peak in late 2022. But another item came out today out of Wolf Street. It's another piece of data here, a chart. And this is employees at non-bank real estate lenders. These are your non-banks, right? So not Chase and Bank of America, but ones like Rocket Mortgage and other ones, capital groups and stuff like that, right? So employees at these banks actually plunged below what we saw during the midst of the 2008, 9, 10 housing bust. We're down 38% from the peak. As far as the number of employees, this is on low volume, right? Volumes at a 40-year low, transactions, home sales at a 40-year low. So therefore, less people needed. Now, some of this also is automation. More people able to go online and do their own quotes and handle their own policies and upload documentation online. So less people are needed because of that. That's part of it. But it's a huge part of it also is the low transactions and low sales, which have not yet translated into lower prices, right? Slightly prices are down, but very, very small, minimal price declines, and still actually up depending on the city that you're looking at. So we'll have to keep an eye on the housing bubble as well for you as well. And again, this all goes back to the system of money, folks. Until they end this unlimited credit card, you're going to see prices stay very, very sticky. And it's going to take something big and major to turn this whole thing around to make actually prices crash. People are waiting for a crash, so I have to keep talking about it and bringing it up. But it's not going to happen, folks, without something major. So let me know what you think about all this. What do you think about the big job cuts, the IRS? What were the other ones? Microsoft. Big job cuts. And what do you think about the lowest inflation in 4 years? Prices still going up. Is that good news? Is that bad news? Let me know down in the comments, everybody. I'll see you back on this channel, hopefully. Make sure you're subscribed and help support this channel. Help keep us alive, okay? Keep stacking, everybody. Bye for now. Peace.